So there's a couple ways you can get people to be poor, so to speak. So I don't think we have a crash. I'll tell you why. What we see right now, what's happening is that globally, people still have the most confidence in the U.S. Right. But inflation, in my view, is always political. The Fed is going to have to keep interest rates high until they see the labor market crack.
Joseph Wang spent 5 years studying the plumbing of the financial system as a senior trader on the Fed's open markets desk. The desk sits at the center of the dollar system, as it is the ultimate and infinite provider of dollars. It has access to virtually all regulatory and financial data. It is one of the few places in the world where one can definitively learn how the system works. In this episode of Essential Investing, Wang spills the secret sauce about the Fed's game plan to combat inflation. He and the interviewer Mark Moss, an excellent investor in his own right, go back and forth about the Fed's plan and the role of Bitcoin as a safe haven. Stay tuned if you want to hear what the insider is doing with his capital and whether inflation is the big bad wolf the media portrays it as.
Yeah, Bloomberg Intelligence put out a piece of work that they said that they think they could see Bitcoin transition from a risk-on to a risk-off asset by end of 2022. So that could be interesting. You know, I've often said that Wall Street trades Bitcoin like a risk-on asset, but it's not a risk-on asset. And so there's like this mismatch in perception and reality. So it's trading like a risk-on asset, particularly because of Wall Street has taken such a big chunk in it and the market's small. But what we're seeing in about 4 billion people in the world living under totalitarian regimes with triple-digit or double-digit inflation, they're using Bitcoin to get out of confiscation, high levels of inflation. I covered it yesterday on the radio. Sub-Saharan Africa is the largest place of adoption happening. If you look at transactions under $1,000, like 80% of them are happening there. And so you go where the pain is the highest. At some point, that reality flip-flops, right? So it'll be interesting to see how that happens. So that sequence that you talk about, weaker countries falling first, money moving to the stronger ones, to the USD, then eventually, though, the USD is going to have the same problem, and then people will find other outlets for that. And so whether that's real estate, which has been a traditional one, or stocks, gold, Bitcoin, et cetera.
On the one hand, the Fed is trying to slow down the economy by raising rates. On the other hand, Joe Biden just announces he'll forgive hundreds of billions of dollars in student loans. So they're pushing against each other in a way. Inflation is basically the Fed's primary mandate for the moment. And how do you get inflation down? Well, the way that I think about it is inflation comes down when people can no longer afford higher prices. How do they no longer afford higher prices? When they have less money, okay? So there's a couple ways you can get people to be poor, so to speak. The one is to make asset prices go lower. Like you mentioned, making the stock market go lower. That means people have less money in their stock account to go spend and buy stuff. If they can't afford higher prices, inflation will come down. Now, the other part, which is what I think the Fed is emphasizing more now, is that if you have lower wages. If you have lower wages, then you can't afford stuff. So wage gains, according to the Fed data, it's growing about 6-7% annual rate. If your salary is going up 6-7% a year, obviously you can afford a 6-7% inflation. So in order to get inflation back down towards 2%, you're going to need wage gains of about 2, 3, 4%. And the only way to get that is to have higher unemployment. So that's what they're trying to do right now, basically raise the unemployment. It's not a pretty thing to say, but that is very much the goal. And it's a hard goal too, actually. The labor market is very strong, and it seems we have a shortage of workers. So the Fed is going to have to keep interest rates high until they see the labor market crack.
Yeah.
Wang goes on to talk about why a crash is not imminent, the long-term strength of the dollar, and the political puppet strings that push and pull the macroeconomy. Do you think that a digital currency would help hedge against future inflation threats? Or is it too much power in the hands of the government? Let us know below in the comments. Please subscribe and hit the bell so you get immediate notification of tomorrow's video where New York Times best-selling economist Jim Rickards reveals the unspoken truth of why the Ukraine war will lead to mass starvation in key countries and the downstream effects that will catch many investors by surprise.
So I don't think we have a crash in mind. So, and I'll tell you why. So just like the framework that we were discussing, the periphery falls first and money goes to the center. We see the UK falling, right? Okay, so their bond market goes crazy and their currency depreciates. That means a lot of people are taking money out. They don't have confidence, or they don't like the outlook in the UK, or maybe they find the US more attractive, and they're putting money here. Now, I was actually just having this conversation with a foreign-based investor. Suppose you are a UK-based investor and you invest in the NASDAQ. You would have lost a lot of money, right? The NASDAQ went down. However, when you look at it in pound terms, you're not really down that much. Maybe you're even flat.
Right.
Because even though the NASDAQ is going down, you invested in dollars. So in local currency, as the dollar appreciates, you're earning that in pounds. And the same thing in Japan, for example. You can see the Japanese currency basically went from 100 to 100, 140, right? Almost 30-40% depreciation. So if you're a Japanese investor and you invested in US stocks, sure, the stock market went down, but the dollar appreciated a lot. So in yen terms, your account looks more or less the same. Now, this is going to happen to a lot of foreign investors. So they're going to want to put money in the US because even if the US stock market goes down more, they're going to earn money from the FX appreciation. The dollar's going to go up. So they're going to be buffered from the losses in the stock market. That kind of puts support in the US. So much foreign money going in and just buying US assets. If that's the case, I think it's hard to have a crash. Just have a lot of foreign money pouring in, making money off the dollar appreciation. What we see right now, what's happening is that globally, people still have the most confidence in the U.S. Right. And if you have problems in the Eurozone, if you just look at, the euro is depreciating a lot, that means a lot of people are moving money from Europe to here. And similar in Japan, similar to many other countries. You go to where you feel it's the safest. In U.S., here we have positive interest rates. We are secure, food secure, energy secure. There's no war nearby. So if there's unrest in the world, the U.S. is going to be the ultimate beneficiary. I think we see this now. I expect this to continue. So now, continue strengthening of the dollar. That sounds reasonable to me. But as we've been discussing, the U.S. has its problems as well. Ultimately, we will not be able to keep printing and spending forever. But there's a sequence to this. First, the weaker countries, the periphery, they have their problems. They fall. Money comes to the U.S., concentrates, but eventually money is going to have to go somewhere else as well because the U.S. has its own problems. So what it could happen is that it can just go into things like real estate, commodities, things like that, things that cannot be printed. Because if the question is ultimately that the people who manage our currency system, the government, is not doing a good job, then you want to go to items or things where the government cannot mismanage, and that those are more tangible things like real estate and gold, maybe crypto as well.
Yeah.
So inflation, in my view, is always political. So how do you create inflation? Just give everyone $1 million. Everyone has $1 million in their bank account, you have a lot of inflation. Yeah. How do you create deflation? Let's say raise taxes to 90%, take everyone's money away. Hike interest rates to 100%, make the stock market go to zero. Mm-hmm. So inflation is ultimately, in my view, a political choice. So I think a CBDC there's really no use case for the U.S. So CBDC, if you look at who's really gung-ho about CBDCs in the world, it's like you mentioned, it's China. It's these totalitarian states because a CBDC is ultimately a surveillance tool. It's a way to control people. If the government can see whatever you own, and maybe they can lock your account, maybe they can make sure that you just do what you're told. So it's what totalitarian states really like. The dollar's appreciating because it's becoming more valuable. I think of it as, let's say I have a house and I add a pool to it. The price of my house goes higher, not because there's a shortage, but because I've made it more valuable. And higher rates make a currency more valuable. Honestly, that's actually kind of part of the plan of what the Fed is trying to do. If you listen to Chair Powell discuss his strategy to get inflation down, one of the pillars is to have a strong dollar.
Thanks for watching. And if you want to hear Raoul Pal reveal which sectors of the economy will explode over the next few years and which will shrink, click this video now.